Welcome to AM Best TV. I'm Lori Chortis. We're speaking today to Mike Morrissey. He's chairman of the board at Protective Life Corporation and a special advisor and former president and chief executive of the International Insurance Society. Mike will be sitting on a panel at this year's IIS Global Insurance Forum, which will be comprised of the chairs of several large insurance organizations addressing a variety of issues and topics they, their organizations, and the industry currently face and are focused on. Mike, welcome. It's a pleasure to speak with you. Thank you so much for joining us today.
Good morning, Lori. I'm happy to be here.
A View from the Chair is the name of the panel in which you will be a part of at this year's Global Insurance Forum. Can you tell us more about it and who will be joining you on the panel?
Sure, Lori. The idea is that the chairmen occupy a unique role in the governance and overseeing the management of the industry. And this panel is comprised of three global insurance executives that comprise 150 years in the industry. The moderator of the panel is Mike Magzig, managing partner of DHR International, himself a former insurance company president and now an advisor to boards around the world. I'm representing the life insurance industry in this case as chairman of Protective Life, a Fortune 500 size life and annuity writer. James Vickers is the chairman of Gallagher Re International, who's worked at Lloyd's and worked around the world also for about a half a century. So we have industry-wide knowledge and a depth of experience to address these issues.
And what are some of the issues and topics that you and the other panelists will be discussing?
From the chairman level, we think a lot about succession planning for the CEO as well as for other senior roles. I'll just point out in passing that 20 years ago, the average CEO was in place for 11 years. At this time, the average CEO stays in place for less than 7 years. So succession planning is more important than it ever was. The idea of board composition and ensuring board teamwork. It's often been said that teamwork on a board is like teamwork on a football team, ideally, not like teamwork on a golf team, where it's theoretically a team, but everyone does their own thing. In an insurance company, board teamwork is very important. We're also going to be talking about emerging issues, emerging challenges that the industry faces.
Talent remains a top-of-mind concern for insurance executives and boards. Is the industry making strides in the war on talent and talent development?
I've been asked this question every couple of years for the last 40 years, and I can honestly now say that the industry is making progress. I think one of the litmus tests would be that university risk management and insurance programs are attracting more students than ever, students with higher grade point averages, higher quality of students. There's also evidence that issues that the industry is involved in resonate with young people, perhaps more than in the past. Young people are more aware, for instance, of the impact of climate change on our world and the insurance industry's role in mitigating climate risk issues and in some cases eliminating risks. Young people seem to understand. Young people seem to understand that the insurance industry, life insurance industry, has played an important role in dealing with the pandemic, in dealing with retirement savings issues. So I think there's clear evidence that the industry is attracting better talent than it used to.
What is the board's role in risk governance and risk management, and what are some principles for effective board risk oversight?
Well, this is an area where the difference between governance and management is important. Boards shouldn't get into the weeds of a company's operation. On the other hand, boards should ensure that companies have state-of-the-art enterprise risk management systems, economic capital modeling. Boards should be sure that companies, that their managements are protecting policyholders, are ensuring that solvency is adequate. Liquidity is a critical issue. It's the bottom line. Most industries are run by the income statement. Insurance industry is a balance sheet industry, and preserving financial strength and liquidity is paramount. And these are the things that the board must ensure management's watching carefully.
So, how can insurance organizations best utilize the different perspective of non-insurance directors?
It's very interesting, Lori, because of the aging of the post-war baby boom cohort, there's more turnover at insurance company boards these days than ever before. And this is happening at a time when the world recognizes that a diverse board, I don't just mean ethnically diverse, but diverse in terms of experiences and backgrounds, is constructive. And so insurance companies are now adding a lot of directors from other industries more than ever before. Such people bring a diversity of thought and a worldview that augments the perspective of the insurance experts on the board. It's often the newer directors without insurance backgrounds that have more to say about how social media can best be used, how the customer experience can be improved, how geopolitical events affect an insurance company. These are perspectives that, in my experience, in my recent experience, the directors without insurance industry experience are more likely to bring to the board's attention than the traditional insurance folks.
When we look at today's workforce and the workplace, it looks much different than it did just 5 years ago, especially driven by big changes created by the pandemic. What are some of the changes you see today, and what opportunities and challenges do they create for the industry?
I think every company has a different perspective on the work from home, a return to office trade-off. I will say that the remote work boom has enabled insurance companies to attract people from a broader spectrum than before. For instance, there are many tasks that don't require day-to-day teamwork that can be done remotely, and an insurance company can now, hire a smart actuary sitting in a cabin in Montana somewhere who'll do the work perfectly well without having to live in New York or Chicago. On the other hand, the remote work boom has made it easier for people to change jobs. And so if you don't keep those people motivated, appropriately compensated, and given a sense that they don't just have a set of tasks, they have an actual career path, there's going to be more turnover. So there are pluses and minuses that really are challenging to manage.
Absolutely. So, Mike, how can insurance organizations best ensure management is protecting the enterprise from what you call company killer dire possibilities?
Lori, this is a good example of where I think the board governance function, as opposed to the management function, can add value. A company that sells donuts or bicycles, for instance, probably can't have a single event drive them out of business. An insurance company can have a cat loss that's not properly protected. It can have a reserve deficiency that creeps up. It can have a stock or bond market meltdown that ruins the financial condition. So I think it's important for a board to ensure that there's a robust internal audit process, that there are checks and balances. Having underwriting guidelines, for instance, isn't enough if there aren't checks and balances. Enough project management oversight. These are things that the board can and should do to act as a complement to what the management does on a day-to-day basis.
What evolving or new risks do you see on the horizon that insurance organizations and boards should be thinking about today?
Well, if you think about it, the old paradigm of the insurance industry was sending money to people when bad things happened. House burned down, someone died. The industry has evolved. In the beginning, it was all property insurance. Liability insurance came later as societies evolved. In the beginning, it was all insurance of tangibles. Now it's evolving to insurance of intangible risks, things like cyber. So the industry has to keep evolving. And I think the best way to look at it is that the industry now has an opportunity to look broadly at the risks of people's lives and in the lives of businesses and mitigate those risks in a way that I'm not exactly thinking out loud, but I'm trying to respond best to your question. The companies that recognize that their greatest role is reducing the risks and increasing the financial security of their customers' lives will be the winner as products continue to evolve in the industry.
Well, Mike, any final thoughts to share?
I think the Global Insurance Forum has shown itself over a period of 60 years to be the best gathering of insurance thought leaders, all the stakeholders in the industry. This will be my 30th Global Insurance Forum, and I'm excited about returning to Singapore and exchanging ideas not only with my fellow panelists, but with all the other industry leaders that will be there.
Wonderful. Well, have a wonderful time in Singapore, and thank you so much for taking the time to speak with us today.
Always a pleasure to work with AM Best.
That was Mike Morrissey, chairman of the board at Protective Life Corporation and a special advisor and former president and chief executive of the International Insurance Society. For AM Best TV, I'm Lori Chortis.